We start today with inflation, the economy, and the stock market. Milton Ezrati is chief economist at Vested. Milton, thank you for joining us on KNX In Depth today. The inflation rate is down from a 4 decades high we saw back in June. Explain for us, if you could, why investors are still very, very worried about the current number.
Well, we get a little bit of a break, largely because gasoline prices continued to fall in the month of August. But otherwise, the picture, if anything, had deteriorated. All items less food and energy actually accelerated a little bit in the month of August. Food is still rising at an astronomical rate. And worse than that, the market is well aware that oil futures have started to tick up again, which means that this break in gasoline prices is not going to last very long. They know the inflation problem is long-lasting, and that's what's bothering them.
And with numbers like these, is it an even harder avenue for the Fed to bring it into one of these soft or soft-ish now landings? Because maybe we're even out of soft territory.
The Fed is under tremendous pressure, and Jay Powell admits it, and they're going to continue this process, this anti-inflation strategy, and he's indicated no break. And these numbers we have here certainly don't provide him with any ammunition for doing anything. So it looks like the soft landing is getting harder and harder. Anything is possible, but I wouldn't bet heavily on it.
Okay, looking ahead, grab your crystal ball. Reason to be pessimistic or optimistic looking forward, weeks, months ahead?
The pessimism is pretty clear. It's inflation. Either the Fed jacks up rates in an effort to fight the inflation, and that creates a recession, or the inflation itself could create a recession because it imposes a lot of distortions on the economy. So that's the negative side. The positive side is peace in Europe. And we can get from Washington more restrained policies that make people feel comfortable about this inflation environment, and it dissipates more gradually, and we can escape with the soft landing. Peace in Europe doesn't look very likely, though.
Worst day for Wall Street since June of 2020 was 1,250 points is what it looks like it's settled at for the Dow, the drop. How much do we concentrate on that, or have we gotten used to these major swings? And yeah, this is a huge one, but I mean, it could be plus 600 tomorrow. We've seen this a few times.
It could be. We could get some good news, or the market or the investors could simply say, well, we've overdone it. Maybe they see something optimistic, or they hope for something optimistic. That can happen. I think with Fed raising rates, we've got some more downward correction before we bottom. The market, keep in mind, is always turning up before we get the real news on the economy. So that might be closer than it would appear with the forecast of recession or hard times ahead.
You think a lot of people are sitting there going, well, what do I do with my money? I've got cash. I need to pull it out because I don't like this. But, where do I put it? Not a savings account. I'm going to get nothing back.
It's very hard right now because bonds are no place to put money. Right now, one of the things that's keeping housing prices from falling more than they would otherwise because of the rise in mortgage rates is that real estate is the best for the average investor. Real estate is the best place to hide in an inflationary environment, especially with the Fed acting this way.
Milton Ezrati, chief economist over at Vested.